Welcome to Trading Lounge and the daily US stocks for Wednesday, February the 2nd, and starting with Amazon here. So with Amazon, we've been looking at wave 3 here with an A, B and C wave here. For wave 4, we're looking for B to C with 5 waves of 1, 2, 3, 4 and 5. Now, if the major trading level 3 here becomes the retested retested support rather, then we're going to be looking to go long at that point. So if we see a pattern that is nice and neat like this here, if that's the 3000, then we'll be looking to go for an entry above here. If we can get a better entry, we'll be here. And this way we're not going to miss anything because some of the markets are looking bearish and some of them are looking bullish. So such as Apple is looking bullish. So we've got a bit of a mixed bunch. This major trading level 3 here may play out a little bit differently in that it drops below the level here. That's more common. So this is the most common pattern. So if this was the 3000 here, then we have the arrival, the reaction, the first high above the level, then the ABC correction, and then we get back up here. This little pattern here is a fractal of this bigger pattern here, and we can refine that entry. So basically we need to, change our hat from being an analyst to a trader in that regard. So let's go in and have a look at this in terms of how we can be long in this and how we can look to be short in this as well. Now I also want to point out that, as I mentioned, some stocks are bullish and some are bearish, and it's kind of like, are we bullish, are we bearish, what's going on with all of this? I think that for the weaker stocks that we can stay on the bearish side, and on the bullish stocks we'll just go with the bullish count because, as I mentioned, Apple has moved quite high. Google's moved quite high too, Alphabet, because it's moved up with its wave 4, but it's also overlapped wave 1 here as well, so that sort of destroys its count. So with Apple and Google, we could also look to be on the long side of the market. We could also be on the long side of the market with these stocks here that are looking weaker and that haven't traveled very high. But if they do follow the other leaders to the upside, well, then we need a very nice strong trade setup on this 3000. We need to use the closest largest number as the trade setup, because that's where all the orders start to gather around, and if it is support, well, then you can just put your stops under that support, and that's a sensible, practical way forward. So let's go in and have a look at this on the 100 tick chart. So, I can look at this as a bullish count. I can count it as bullish. I could look at this as wave 1 here with an ABC for wave 2, and then wave 1 and wave 2, and then wave 3 and 4 and 5 and so on, keep building to the upside. And we will be looking at stocks today like that. This kind of reminds me of Meta Platforms pattern as well. It's the same. So so with the classic trading levels pattern, so we've just arrived here, and the arrival can be a little bit sometimes the market just comes to here and then drops, and when they drop, they'll drop in 3 waves, and then they push up through here in 5 waves up here. And the idea is not to chase that up there unless you're scalping, because then it will just run out of steam and it'll fold back and it'll bounce off that level because there'll be orders there, and then that will run out of steam, and then it'll move down again. But if it doesn't run out of steam as it moves up here, that reference point high here, that's critical to go long on at this point. Now, sometimes when the market comes up to here, it doesn't have a clean cut. It can sort of do all sorts of things, and it'll look like it's a high here, but then it'll have its correction here, and then it'll have another high up here. So it's like this here. I just configure. I don't make any decisions quickly or lightly. I allow things to play out and roll out, and then when they sort of mature, then we get to recognize them, when we're basically got to be sheep as we trade here. You don't want to be a black sheep in this case. It's all right to be a black sheep in life. It's a bit of fun, but when it comes to the markets, you really want to join the herd and mosey along, so to speak. So it can be a little bit tricky with the trading level pattern here, but what we're going to do over the course here, we can see that here we've got wave 1 and 2 in here, right? And then we can see this nice strong third wave here, and there'll be sort of wave 1 and 2 in here and 3 in here and little 4 and 5 going up here for just this one. So I think that this 1 and 2 here, we haven't seen wave 3 here yet in this case, and then we'll have wave 4 here, and then we'll have wave 5 up here for this. So that would make the A wave, the ABC for the B wave, then 1, 2, 3, 4, 5 here. Once we've got those 5 waves, then we can say to ourselves, well, look, really anything above that top there now, we can go long on that, but we can get a better position than that. So we can bring it down to this one here. And then if it comes back up on the level just in here, and we see another little classic trading levels pattern in here, which will be a fractal of this bigger one here, where we have the arrival, the reaction, the first high above the level, ABC correction, and then building up at that point. So then we could build into there. So I'm just putting it in the middle here. Sometimes you can't see the B wave here. It's a little bit sort of tricky to get. So that means we have to revert back to this one over here for that. And the other idea with this too is that if we get a nice tested support on here, then we can start looking to the upside. So basically it's like going from one bus stop to the next. You're really going from one number of the same degree to the next number of the same degree. So in this case, it's like 3,000 to 4,000. And along the way, we've got the Fibonacci sequence of numbers 1, 2, 3, 5, and 8. So we know that the Fibonacci tool, in terms of extensions and retracements that Frost introduced to Elliott, and he started to put that together. So we're just really using that as a price ratio here, and it works quite well. But it also is a little bit more than that as well, because when we're working with double zeros, single zeros, whole numbers and even numbers and odd numbers, they've all got their sort of ranking. So I put number 1 as the strongest number, then 5, and then 8, and then 3. So orders tend to gather around large numbers. So the idea, really, if we were trading from 3,000 to 4,000, we want to basically build in at the beginning of the trend. Unfortunately, in this case here, if this turns, sometimes we can get a nice ABC pattern down to the low here and have wave 4 here, and then we can trade long at that point. But the trouble with wave 4s is that there's 11 or 12 different corrections, and sometimes we can just end up with something a bit more complicated that we can take on board as a wave Y here. So we have an ABC down here rather than the wave C, rather than a wave 3 at this point, and that makes the wave 4. So then we got to kind of work through this so we don't get sort of trapped. Now we have been trading long in some of the stocks, and Tesla and a few others, and we've maybe still in some of them, and we're basically getting out at the tops here with them, and then we'll find our way back in. So sometimes we get the wave 4 here and we can build in from the low, and everything's fine, but sometimes it's not fine, and sometimes the market gives us something a little bit different, and then we've got to solve that problem, and this is the only way I know I can solve it. So yes, we have missed out on some of these moves here, but we got some of them, so we got to took a balanced view on it, because that's all we need to do at the end of the day. But anyway, coming back to this here, if we're going from 3,000 to 4,000, the idea is to build in at the beginning of the trend. So 1, 2, and 3, they're even on the 3,000, and then on the 1, 2, and 3 here, this is where we build in our trades at the beginning of the trend. If we get support on number 3 here, the top of minor group 1 at this stage, wherever you see a number 3, it will be minor group 1, it will be subgroup 1 or micro group 1, just depending on what level, what degree of structure that you're working on. But if we get support on number 3 here, then we're going to be leaving the closest largest number at this point. And this is the other thing too, just why we're here, is that when we're talking about 3,000, we've got group 1 above, that's its swing range for above, and this is group 2 below here is its swing range from here. So from 2,000 down here, wherever it is, we've got 1, 2 and 3 and 5 and 8 here. So the low of wave 8 here, you can see group 2 here supporting this market, and that's exactly what it does. It holds the market back to the closest largest number. So when you realize that 1, 2 and 3, when a market is going up here, is going to be, resistances and try to pull it back to this number, and this will be the support here, well, then you'll just generally make your decisions, above this level and below this level. I mean, we could put this in smaller context as well. This is a little 3 here, so we could look at group 2 here. Between 200 and 300, we can go 10, 20, 30, 50, 80, and when we talk about 80, we talk about group 2, so 72 and 65 in there, and above 300, we'll be looking at 10, 20 and 30 there again. So that would be the swing range for that particular number, and when 330 here becomes the support, tested support, then we know the market's leaving this number and going up, being pulled up to number 5, the 50 at that point. So it's gone at that point. So what we can do, we can build trends, we can build positions into this trend here, into this move here. But if this doesn't become, if we don't get a classic trading levels pattern on the 300 here, and then the number 2 becomes the retested resistance, well, then we've got to pull our trades out at that point. But if it becomes the support, tested support, then we could build in on that one and then trade up to number 5. Now, when you get to 5, you can either take money off the table or you can do nothing. There will be another, because it's the second strongest number, there will be another pattern there as well, unless it's in a third of the third of the third parabolic sort of move. Well, then it basically won't do something there. But besides that, it will do something. So you've got choices. Before you get there, you could take some money off the table, you could buy back in, you could just wait for the classic trading levels pattern and add more. And when you come up to these levels here, this is basically where you start to scale out and you take money off the table. So the number 8 I always call a profit-taking number, because when you're approaching a large number, people think of 8 more so than 9 or 11. So I always use the example 10. So that means that, if somebody's trading up to 10, which is a whole number, because that's where the Fibonacci numbers go. They go 1, 2, 3, 5, 8, and then it goes back to 10 again. So the power of 10. So we go 1, 10, 100, 1000, and so on. So it's just that 1, 2, 3, 5, and 8, and then the cycle repeats on the power of 10. So at 10, people don't think of 9 and 11. They think of, well, if I'm going to get out early, I'll get out at 8. So that's why 8 becomes a profit-taking number. And when you watch the market depth enough, you can see all of that. Okay, I've rambled on enough, but so that's that. Let's have a look at Alphabet. Now, I left this here so we could just talk about it a little bit. So first of all, we don't need these trades here. We've been stopped out on those, and I can't remember if we took some money off the table at a large number down at the medium level. We should have done. Now, the thing here is that this wave 4 that I was looking for has overlapped wave 1. So we can't call this down for 1 and back for 2 and then down for 3 and back for 4 because it's overlapping. So we could call it down for 1, back for 2, down for 1 and back for 2 at this stage. So it could be another 2 and we could be in a big bear market. I mean, we need to look at everything, don't we? So it's above a 61.8%, but the 61.8% is not, it's not the be end and end all, the end of the world or anything. So, it could build up a bit higher here and still come down. So we need to be mindful of that, of 1 and 2 and 1 and 2 in here. But it's more likely to be an A wave, a B wave, and a C wave here for a Y of wave 4, as we looked at before, and then looking for wave 1 up here. So that's basically what we'll need to do at this point. So I'm just going to move these out of the way for the time being. And yeah, we need to start looking at, this in a bullish count now, in its own little way, because that's the only logical thing to do at this point. So that means like, well, have we missed anything? What are we going to do now? And yada, yada, yada. So, but we don't really need to do much of anything at this point. We just go, well, okay, well, shit, that didn't work, that wave 4. So, you know, I don't feel like we've missed anything here, because when we look at wave 3 and wave 4 here, that means that if this is correct, we'll be taking out that top. So that means we'll end up probably, you know, way up here somewhere with this. So if we look at this as 1, 2, 3, 4, 5 here, then we'll be looking at, well, wave 1 here somewhere, and we'll look at that. There's plenty of resistance around here. It'll pull back in some way or another, and this is where we'll get in, you know. And wave 3 is going to be longer than wave 1, and then we'll see wave 4 here and wave 5 here, something like this. And then we're going to see it's not going to let go of this number very easy. And once again, when we talk about the levels up here, we've got group 1 up here. So with group 1 here, then we've got group 2 below. So when we're at the 3,000 here, that's the swing range for this particular correction. And when you think about it, this is the arrival at the level, this is the reaction, and this is the first high above the level. So then we'll get another ABC correction here, and then we'll be going up further at that point. So we can put this wave 5 over here, and then look at this as wave 1 here and wave 2. Now I know that Bob Pratchett says that this wave 5 is going to be the end of the world and yada yada yada, but and he, look, shit, I mean, he's got to get it right at some point, doesn't he? You know, so we'll be mindful of that. So, you know, I love Bob's work, and he's, you know, carried the flag. He's done such a fantastic job, and I'm very grateful. But he doesn't always get it right. Yeah, anyway, there we go. So let's just go into the 100 ticks here and just check on that a bit. So that little move that I said from the low here on this 100 ticks, we need to look at this as 1 and 2 here, and 3 and 4 and 5. So there's not a lot to do here, and the market's not going to go very far. And you know, if I'm wrong and we hit the 50-60% retracement level, and, you know, we end up with 3 waves up there, and we start to come down much deeper, and we say, well, shit, that's not a wave 4, is it? We've come too low. We've overlapped wave 1 and yada yada yada. So then we'll have to turn bearish again at this point. But I think that taking a practical approach, and an approach that we don't have to rush into the market, because we've got bigger fish to fry. You know, I'm a vegan, but I should use something else. But anything with a face on. So yeah, so anyway, there we go. So that's that. And now Apple, you can see that Apple's moved up really high here. So we'd been talking about this yesterday and so on, about well, you know, because our target to the downside was actually 160. We come lower into the 61.8% mark, and you could probably count all of this different, but you know, my original ABC correction here has played out as okay. You know, we may have to label all this the A wave and a B wave up here, because we've still got 3 waves up here, but I'm thinking that we'll get 5. And if we do get 5, then we need to wait for that pullback, and this is where we get in, because if we can note 5 waves here, that means after a correction we're going to have another 5 waves up. So when you think about it here, we're in group 2 here, and we'll be heading up to 200 and beyond in, you know, 1, 2, 3, 4 and 5, the first high above the level. So the arrival, the reaction, the first high above the level, the ABC. So yeah, so let's just go in and have a look at this. So yeah, the ABC, I think we talked about that yesterday, but I've just filled in the dots here a bit more today. So wave 1 and 2 here, 1 and 2, 1, 2, 3, 4, 5, the third wave, fourth wave, fifth wave, fourth wave, fifth wave, and back again. So I think there is some point we may be able to, I mean, I know with Microsoft the wave 2's never come back that far, so we may be able to get into a better position here, and I'll give that some thought, and we'll check on that tomorrow. And it would be nice to do a trade from 172, because we're in group 2 here, and group 2 is really quite wide, in this case 65, 72 and 80, and there's lots of other numbers in here that are really important, you know, like, well, after 65 will be 60, 68, and then we got 170, and at 70 we can use that as a whole number and look at 70 71, 72, and 73. Then so 1, 2, 1, 2, 3, 5, and 8 in here can come into play, though they would be the next sub-levels, the next degree down. So I'll give this some thought and we'll stay for another session. I can see that it's looking a little bit sort of tired here, but if you wanted to go long here, then you can look to go long above here, or you could probably even draw an angle down here on this sort of thing and trade up to, well, you know, 8's a profit-taking number, so 180 is going to be a profit-taking number, but also too the 178 is going to be a profit-taking number, and also use the levels here as well. So from 170 you got 1, 2, and 3 here, and then you got 5, so you may be able to add on 5. And then when you're talking about 178 here, when you're talking about 8, you always talk about group 2. So group 2 will have 176.50 in it. That will be part of its group 2 there, so 176.50 will be one level, and then the 72 in there will be the one with the 7720 in there, 7720. So that will be all of subgroup 2 within there. And if you put the levels in, then you'll see the market playing out. Then become useful. It's very difficult to eyeball it. Okay, meta platforms as well. We can see here that wave 4 is also overlapping wave 1 here. Now I could probably jig this around and put wave 1 onto this low here and look at this as an A and a B and a C, because I did have that count before as well, and that would clear me from that. So in this case I think we need to look at both counts here as well for this. So, I mean, this is a bit more of a complicated count, this one here. It's been going on a bit longer and it's been a bit, just a bit more complicated. So you could count this in many different ways. I mean, I always go for the most simple counters, like an A and a B and a C wave here, but you know, it can certainly be counted differently. So just because I count it one way, don't think that it's the right way. And I always try to keep things as simple as I can with Elliott, rather than, you know, because when you start using, you know, I mean, the X wave, you know, using an X wave between two other patterns is something that Proctor brought in, and I sort of always see that as a bit of the joker in a deck of cards, you know, so you can use it to, you know, do whatever you want with, so to speak. So, but anyway, that's not good to have too many opinions about things like that. Let's go to the tick chart. So this is the count. I had this as a triangle pattern yesterday. So, you know, as an A, B, C, D, and E wave here for that. And it was kind of okay, but this counts better as 5 waves up, and this counts better as 5 waves up. So I'm looking as an A, B, C for the B wave, then 1 and 2 here, and 1 and 2 here, and then 3, 4, and 5 here for wave 3, then wave 4, then wave 5. So there's a bit to go here with this. But what it does do, when it gets to the top here, that's going to be quite interesting, isn't it? Because at this point up here, this is where we can go long here. We're in group 1 at that point, so we could get a small position here and then build on the 30 at that point. Otherwise, we need to look at being on the short side for this. Now, on the short side, we definitely need to see 3 waves down, like an A and a B and a C, because if it's going to be bullish, it'll just be an ABC pattern. So we can look to short under the ABC pattern, because quite simply under 3 waves, it's going to be, you know, something else. You know, it could be, you know, down for 1, back for 2, down for 1, back for 2, or it could be 1, 2, 3, 4, 5 coming. It could be, you know, a variety of things. So anything past 3 waves, well, then it's something else at that point. I think that I've got, yeah, so I've got 5, the 5T there, or whatever I put in small language there, just means it's 5 ticks. So this is 100 ticks, so it's going to 5 ticks. And I've got a bullish count, counting all this in a bullish way, so I might need a bit more here. So this would be the bullish count here. It looks a little bit messy because I had to get it right in that trend. We can have a look at that in a moment. But in a nutshell, wave 1 and 2, 1 and 2, and 1 and 2. Now that kind of is suitable as well, because this market has pushed quite nicely up here for this, but as a third wave, so to speak. So we would still need it to go 1, 2 here, and then 3 up here, and 4 here, and 5 here. So we've got a long way to go before we get this pullback. But that doesn't mean that, you know, we can still build in on the 320 here and have a bit of a ride up here and check it out. So between wave 2 and wave 3 here, we're looking for 5 waves. So we've got 1 and 2 here, and then we've got the third wave here that will take us into the 320 area. And then from wave 2 to wave 3 here, we're also looking at 5 waves as well. So we'll just go in and explore those a little bit. So we've got wave 1 here and 2 here. That's pretty clear. And then we've got wave 3 here and 4 here. And then we've got 1, 2, 3, 4, 5 here for the third wave, fourth wave. End of the session, it's going to get a little bit ugly. We might need to bring that over here somewhere, and then wave 5 up here for that. So that will push up into here, and that will give us that top. And then we still need this wave 4 to come into play, some reaction there, the arrival, the reaction, and the first high above the level, which will be this wave 3 over here for that. Wave 5 and wave 3 at that point. But if we were looking at the market in terms of the bearish count, that this move up, this wave 3 here, would be wave C or 4. So that top there would be the top of the corrective pattern. Anyway, from wave 2 to wave 3 here, I think that we can just have a quick look in there, just in case folks have, I'll just take it to that wave 4 there, just in case folks are wanting to count this. So I've counted it up as wave 1 and 2 here. And well, that would be 1, 2, 3, 4, 5 for 1 and 2, and 3 and 4 and 5, and then 1, 2, 3, 4, 5 for 1 and 2, and 1 and 2, and 3 and 4, and then 1 and 2 and 3 and 4, 5 for the third wave. Doesn't look quite right, but it fits there okay, I guess. And 1 and 2, and then yeah, and all of that is the third. So that's really these are the thirds of thirds in here, all of these here. So yeah, anyway, that's how I counted it, and you can have a look and make up your own mind. And yeah, anyway, it's just, it is what it is. So look, there's nothing really to do here, because in a way we can see that the markets are sort of tripping over here a little bit, you know. Let me just this is Facebook here, sorry, I need to get that into thing here, because I'm just looking at the volume on TradingView, because that particular, I like doing the charting and the counting on the other platform, but because it's a market maker, I just don't trust their volumes. So this is Facebook on TradingView here, and we can see that this bar here, today's trade here, is on lower volume. So we can see, you know, it's trends have got a beginning, a middle, and an end. So we're at the sort of end of it here. So we'll just see how it goes. So we don't know. I don't know if it's going to roll over as wave 4 or we're going to keep building as wave 1. But we're looking at both sides of the market, and we're developing strategies to be able to move in and out of them, you know. So that's what we're doing. Moving on now to Microsoft. So Microsoft is another one that is overlapping wave 1 now. So I know that the whole move here is corrective, because we've got 3 waves in the first leg here. So we always knew that was the case. And then we worked through this ABC here. And then we had a beautiful 5-wave structure down here. So we knew that, well, that could be the end of it at that point too. We looked at that, didn't we? If you remember, as an A and a B and a C. We knew that it was a bit low, so it wasn't probably the case, but, you know, we took that on board, and we noted this move in here was corrective. So we knew then that this had to be wave 1 and 2 here, and then we're coming down for wave 3. Now, the situation now is this wave 4 here is overlapping wave 1. And do we call it wave 3, or do we look at this now as a WXY here for wave 4 and we're finished here? Or could all of this be down here? Could all of this be down here just be a W, and then we have this little X up here, so WXY, and still come down here? You know, so this is the trouble with wave 4s. There's a lot sort of going on. The stochastics have moved up a little bit on this, so we need to look at this in different ways as well. So let's just go to the 100 ticks here. Bit of an overkill on the volume. We can bring that down, bring it down a bit further. Okay, so we've been working with this low here, so we need to We need to look at it. It's possible to have it as a Y, and wave 4 is already complete at that point. And then we could look at, looking at it as an A wave and a B wave and a C wave last time we spoke. So going from wave B to wave C here, we can see that we've got 1 and 2 here and 3 here, and then this side, because wave 2 was simple and sharp as an ABC, we're getting this complicated scenario here. And look, it may overlap wave 1 again, I don't know, but we should really be looking for another move up here for this to finish off. But once it finishes off, if we consider this the A, the B and the C here, then it can't come any further. And it doesn't matter if it's at this stage, it doesn't matter if it's a wave 4 or even a wave B or the wave X that I just mentioned as well there. It could be all of those. But in a way, if we understand that being a top there, once we get that push up there, then when we get a pullback here, we can go long above that top. Any move above that, we can go long, and then we would need to look at it as maybe wave 1 and 2 here, and then 5 waves up for wave 1 and back for wave 2, and then move up. Now, I don't know if that's the case or we're going to fade down, but we can't short this market really until we move through. If we can count that as a bullish move here, well, then we can't go short. And we don't go short above large numbers unless we've got a really good reason to do so. So we would need to look on the short side. So we would be looking for a classic trading levels to the downside. Now, that could also be nice and square here and just drop from that point. So we keep an eye on that reference point low, but it may come back above the level and we could use that again. But in one way or another, we would need to look for, we want that number on our side. We don't want to be against the trend. We don't want to be against the numbers, So we would need, we'd need something like that to pin that back to that, because once we know that that's been tested as the resistance, well, that's where the stop goes, It's as simple as that, because you know that you don't even need to look at the market depth because all the orders will be building up there. So for this Microsoft, this is the Fed's comments, of course, but yeah, now that the dust has settled, we need to just allow this to play out. There's nothing really to do here because, you can get lucky, but we don't want a 50-50 bet. We want to be up at the sort of 80-90 area, just, to get our 7 trades out of 10 right, Okay, so let's move on. So we just got to wait for Microsoft. And Tesla is also the same as well. We've got it as wave 3 up here, or wave 1, and we can look at this as an A wave, a B wave, and a C wave here, down to finish off here. And we've got a very clear 1 and 2 here, and we've also got a clear 1, 2, 3, 4, and 5 here. Now this wave 4 came very close to its wave 1 up here as well, so that's okay. And this wave 4 is coming quite close to its wave 1 here, so that's its sort of DNA, fingerprint, behavior. It is what it is who it is sort of thing, that group of folks that trade this market. So yeah, we also need to look at this as a WXY here as well. So then we need to understand this particular move here, and I've obviously got it as a wave 4 on that top there, so I'll go and check that. But yeah, we need to look at it now as, well, is that wave 1 to the upside, and do we need to sort of work out how to get long over here for that, or are we going to have, another move down here, or are we just going to come halfway down and we're going to have some sort of little ABC and then push up at that point? So this is what we need to do. We need to figure out what's what here now with this. We need to be prepared for both sides. We need to stay flexible. We need to stay open-minded. We need to stay with the facts, according to us, of course, our counts, your trade setups. So from the low here, we can see that this is an impulse wave here. So look, it can be wave A and wave B here and a wave C up here, and that's what we're looking for. We traded long up here, which we took profit, so we can get out of that. We don't need that. And you know, it makes quite a nice little A wave, B wave, and a C wave, this nice strong wave, to this wave 4 here. And we don't want it going any higher because then it's going to overlap that wave 1 that we've got over yonder over here to the left. So that top there would be wave 4. But if we were looking at this as a bullish count, then we would look, that would be an A and a B and a C here to wave 4, and that's it. And we can count that 1, 2, 3, 4, 5 here. So and that's in 3 waves here, and it hasn't taken out the top here. So it could just sort of roll over and come on down at this point, right? But it also could be 1 and 2 and 3 at this stage, with an A wave, a B wave, and a C wave here for wave 4, and then push up here for wave 5. And then we would have wave 1 up here, and then we'd have back for wave 2. It won't come back below the level in this case, I don't think, but I'll just put that a bit closer. There's a lot of support going on here, and we've got group 1 and all the rest of it. So I think the wave 2 will be a bit of a shallow pullback. This one here pulled deeper here, but there wasn't really much to support it in that space. It's already created the drama and the support here for this. So we could actually look to go long here. We've only got really 3 waves up here. So this would be a C wave here. So we've got 1, 2, 3, 4, 5 here now. We could, I mean, it still could be down for wave 1 and it could go back for wave 2, but it looks like a C wave because it's with corrections, as you may know, and it's not always the case, but the market comes up. The A wave is normally the sharpest, and it's the sharpest because it takes out the stops. You know, somebody's taken, a group of people have taken profit or whatever the case may be, and all the stops get triggered in the A wave, and then the B wave rally comes in, all the value buyers come in and think it's going to go up again because they buy in the dip, and then we get wave C that comes down. But normally wave C, if there's no other sellers in the market, then it's more of an angle, you know, and the more angle it is to the upside, the stronger it's going to be. So this angle here is like, you know, it's a pretty good sort of angle, really. I mean, it's not down, do you know what I mean? It's going sideways. So you can pretty much, you know, trade on that. So what you could do here, if you're looking to the upside, is you could use group 1. So we've got 900 here, which is a medium level. Then we've got 1, 2, and 3, which is group 1 here. So we've had the arrival, the reaction, the first high above the level, and then we're getting a C wave in this case. So normally we would go long here, then take the second high, and then we can take this one here. But you could also just practice refining what you're doing here. There may be another low, although it looks like it could be done and dusted here. But if in this move back up here, you're also going to get a little classic trading levels pattern in here. So if you wanted to watch that just for the experience, and then that will just push up straight up to 5 at that point. So you might want to do a short-term trade up here, or you might want to build in for a long-term trade, you know. You might want to trade up here and take some of the money off the table and then try to get back in over here, and I'll try to do that, you know. So because traders are doing different things, aren't they? I mean, some are going in for the trend, some are scalpers, some are, you know, also some are just trading for the day or a couple of days. Everybody's doing different things, and everybody's using different amounts of money and all those sorts of things. And if you gave everybody the same trades, they would all come out with different results because they would put different bets on, bet sizes. You know, their money management, everybody will be different. But when you take a trade like this, then you just go to the last low and you put the stop at the last low. So if I took this trade here, then all I need to do is just copy that, and then that last low, wherever it is here, then I put the stop there. I can get quite close to it. But also with the stops as well, any long stops need to end in a number 2, or so 992, or 6, so 9926. Because when you're thinking about 1 to 10, so if we just look at this for a moment, might be able to do this here. Just put this on. I'll just explain this. The video is going to make the video longer, but who cares? So that's 10. So we've got 1, 2, 3, 5. Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the thing is that We know 1 is the strongest number, so if we're starting from 0 here, we can call that 1, and we can also call the top here 1 as well, because we would be just using the power of 10. But between the two 1s, the next strongest number is 5. So when you think about it, if you're putting a stop in the market, I always go for, should I put it above 5 or below 5? That's always my first decision, right? So if we're going to go above 5, well, then we think to ourselves, well, what's between 10 and 5 here? So we know that 8 is the next strongest number in all of that. So we're thinking, well, okay, if we're going to go above the 5, I know that 1 is the strongest number. I won't put a stop at 1. I won't put stops on whole numbers. So then I go to 8. So, well, I don't want to put it at 10 because that's the strongest number. So I don't want to put it at 9 because I'll get stopped out, likely. So then all the orders are going to build up at number 8, aren't they? So that means that I'll put it above 5 but below 8. I won't put it on 8. I'm going to have to go below. So I can put it at 7, and I can tell you get pretty good results at 7, but I can also tell you you're going to get much better results if you go to 6. And then when you go to 6, if you think about it from 9 to 6, then you can also look at 10 points within here and do the same thing again at that point. So if I'm going long, I will look, will I be above 5 or below 5? So if I go above 5, I'll be at 6, and they'll be below 6. A lot of the times I do go at 7, depending on where the stock is trading at such. You know, if it's a stock that's, you know, $25 and some cents, then it doesn't matter. Then I'll go for the 6. But you know, if it's a sort of a penny stock, then I'll go for the 6 kind of thing. You know. So then I go under 5, and I won't put it at 4 because it's too close to 5. And I know that 3 here, after number 8, 3 is the next strongest number. So then I've got to go to 2. So most of my stops on the long side will be at 6 or 2. So you'll get better results at that, okay? And on the short side, I won't go into that now, but it'll be 4 and 7. Okay, so let's cruise along here for this. So this is square. So we counted down here, and I felt that this was the low down here, but at the same time I thought, well, gee Pete, the other markets are doing a wave 4 rally. Maybe we're in the wave 4 rally, and I've got this wrong here. It's not like we had a really strong, you know, significant low below here on this one here. Maybe this is an A wave and a B wave and then a C wave up here for this. So any move above this little move here, because I can count this really as 1 and 2 here, and probably 1, 2, 3 in here, and 4 here. I've probably even use this as a top. Then we've got that spike, so I don't like spikes. So anyway, we're coming into group 1 here. So what I'm thinking is that if we get a support, if we get a setup on 130, then we're going to be going long from that point. Then we'll build long. So if it doesn't fail at that point, then this is where we'll start to build in again on this. You may be long already, and that's fine. So we can stay long. If the number 2 here becomes, in group 1, becomes the retested resistance, like with the classic trading levels pattern at 120, then you need to get out at that point. So the stop shouldn't just be at a price point. It also really needs, when you get close to it, you need to, you know, if I was going to get out, I wouldn't just get out because it hit 120 or went below 120. I would need the first low below the level to get out. And then you know, then get out from under that point, or go short at that point. You know, it doesn't matter if you're not long, you might as well be short most of the time. But yeah, so I wait for the setup to get out of my position as well, because it could just dip down here and then go off again. You know, so that number 2, I know that if that becomes the retested resistance, then it's going to be pulled down to the closest largest number at that point. So yeah, anyway, that's helpful. Okay, we just want to have a quick look at the banks, not spending too much time on those. So we look at Morgan's. So with Morgan's here, just get it in here. Let's just get, I don't have the price there, sorry about that. And I don't have the date, so I've got to put the date up there. So we were looking for Morgan's being wave 1 here with an ABC for wave 2 here and having a low in place, and the stochastics are also suggesting the same thing as well. We got the move up through here, it's sort of edging up on lower volume, but what we need here, as I mentioned before, we want a classic trading levels pattern on the 150, so that's what we're looking for. So we've got the arrival, we've got the reaction, and now we need the first high above the level. So we need that first high above the level, anywhere up there will do. And when it pulls back to that point, then that high will be, that high here will become the entry point for this, wherever that may be. Okay, that's what we need, because we need that to be breached over here. Otherwise it will just create the first high, be pulled back, and then have a second lower high and then move down again. That said, we have been looking to be long in BAC here, so we did go long here, and then I put the stop really close. Is that's the 1st of Feb? Oh yeah, because it's we're in the second day over here. Sorry, Australia, it makes it a bit difficult. So yeah, we put the stop really close. You may have been stopped out, obviously here. Yeah, probably have actually. So I'm just going to remove that. Anyway, it was just wasn't that important. But anyway, we'll look at the bank. We'll get into the banks. We'll get to them, and Goldman's we're looking at as well. So Goldman's can have a low in as well. I just didn't want to take the low off this as a wave 2 here, and this was basically our target area for this move down. But I was never that keen on this because this was not a lazy wave C here. It was very sharp and the gaps in it. It's more like a wave 3. So yeah, it's bouncing back quite strong. The stochastics suggest a buy. So anyway, I'll let it just develop, and we'll get some other pullback in here for these as well, and then we can build upon the 400. We'll try to get, I think at the end of the day, what we can do, if it is going to be bullish, then there's going to be some move up here somewhere where we'll be able to get some pullback into here, and we can look at what we've got at that point within here. But normally what I'll try to do in these cases, because it's, it's a bit dangerous, going long in here. I mean, the money's in the turn and all the rest of it. It takes a bit of intestinal fortitude to move in. But in the bigger picture for the trend, we'll try to get a position below the 400, and we'll try to build in above the 400. So on the 400, we'll be going 10, 20, and 30 in here to build into here. So that's what we'll do at that point. I should point out too for members that if you're looking to buy on lows and sell at tops, then the switch method, the daily switch method, which is sort of in with the robo method, is definitely worth checking out because it's got a very high degree of success, and that would have got you long just on the top of this bar here with a stop under here and then a stop here and then a stop under this one for the end of the day. Unless you want it to run, you can switch to weekly chart at that point. But and the same at the top here on the short side. So the switch method is a really good setup to trade long. Alrighty, this is a long video, so apologies about that. But anyway, I enjoyed myself, so that's part of the process. Cool, cheers.